So now let's learn to identify those two things on the chart, and then we'll take it deeper adding these things called odds enhancers. Number one, where and why do market prices change direction? Let's learn to identify those supply and demand levels. So I'm pointing to the chart here. You should be able to see that. Let's focus on this area right here, okay? Here, prices are trading sideways. Supply and demand appears to be in balance, okay? Price isn't moving up or down that much. It's just moving sideways. But all of a sudden, there's a strong drop in price. Now, a lot of people will look at this drop in price and say, ooh, I can't wait to learn how to predict that that's going to happen. Or, I can't wait to learn how to get paid when this prices drop like this and make money in that. That's not what we do. We don't do either of those two things. Instead, we sit back nice and relaxed and we let prices drop away from that level. When they do, we understand that the only reason why prices drop away from this level as they do is because supply and demand are very much out of balance at the origin of that drop. Okay? In other words, again, the only reason why prices drop as they do here is because there's way too much supply up here, no demand, and anytime that equation happens, prices are going to fall. So, think about the trade desk. We want to know where that big stack of sell orders is, right? I mean, if you know where the real buyers and sellers are in the market, can you lose money, right? You have to do something really foolish to lose, right? Okay. So, this is that big stack of sell orders on the trade desk right here. What we're going to learn to do here, and we'll do this more in the second session, is we're going to learn to wrap two lines around this level based on a very specific set of rules, and we're going to carry this level forward, creating that sell zone or supply zone. We want to remember where the sellers are, all right? Down at the bottom, just the opposite is true. Prices are trading sideways. All of a sudden, there's a strong rally in price, okay? Again, once this rally happens and we let it happen, that's when we can say, aha, we now know where willing demand exceeds willing supply, where the real buyers are in this market, okay? So again, we learn to, we wrap two lines around this level, carry this level forward, creating that buy zone or demand zone. Now, how can I speak so strong about that level? How can I say, demand exceeds supply there with such confidence? Because think about it, if that statement was not true, okay, wouldn't prices just keep trading sideways here if there was equilibrium or balance, right? They would, but they didn't. They rallied away. Why? Because demand exceeds supply there. All right. Let's see here. Baston, I see what you're saying. The stack of orders might disappear. I wouldn't say that's something. The most important thing there is, there'll be people that say, that support level didn't hold, or that, prices blew through this level or that level. What happens is, what's your, I'm not talking about you, but, what's that person's definition of support and resistance? Because, my definition of support and resistance is going to be very different from someone else's, and that person's going to be very different from yours. So, prices go through areas all day, but for me, they go through areas that I would expect them to go through. I will tell you that, again, this is just my opinion, but one of the most dangerous things in the whole world of trading education is conventional support resistance stuff, okay? How all the trading books out there draw support resistance lines, to me, makes absolutely no sense. It forces traders to take, the short way to say it is it forces you to jump into losing trades, quick losing trades, if you really follow the rules of conventional technical analysis, okay? So, anyway, so what here is really defining what supply, demand, support, resistance is for us, okay? So far we've learned to identify supply and demand levels on the chart. Let's move to step number 2, and then we'll take this stuff a lot deeper. Step number 2, understanding who is on the other side of our trades, okay? All right. It could be, okay? Not always, but it could be. So let's deal with step number 2. Let's learn to identify that novice trader, that novice market speculator on the chart. The good news is they're very easy to identify because they always make 2 obvious mistakes. Now, why would they make these obvious mistakes? Because they don't know they're making them. If they did, they wouldn't do it, right? So let's take a look right here, okay, the area I'm pointing at. And let's specifically focus on the buyers, all right? Here, these buyers are those novice market speculators. How do we know? They're making those two mistakes. Mistake number one that these buyers are making, they're buying after a rally in price. Okay? Not a smart thing to do to buy after a rally in price. You would never do that in any other part of your life and be consistently profitable doing it. Think of your favorite restaurant and think of your favorite meal that you order at that restaurant. No matter how good that food is, when the server comes and brings your check, whatever it is, do you ever offer to pay more? If it's $40, you ever offer to pay like $60 or $70 because you like the food so much? When you buy a house, do you ever offer more than the asking price? Of course not. You would never do those things. So why in the world, when people come to trading, do they do that here? Okay, that's exactly what they do. Not a smart thing to do. Okay. Yeah, we're going to cover. I'm looking at some of the questions there. I'm trying to I'll try to get to all of them, but I promise you, we're going to get to a lot of those questions are going to be answered during this session. Okay, but I'll definitely scroll back. All right. So anyway, mistake number two: these buyers are buying right into a price level over here where we've already identified supply exceeds demand. Okay, so think about it: someone buying after a rally in price and buying into a price level where supply exceeds demand. What are the chances that this buyer is going to make money in that trade, right? Think of the basic laws of supply and demand. They're buying after a rally price into a price level where supply exceeds demand. The laws of supply and demand guarantee that they are going to lose consistently. Maybe not every time, but consistently, okay? All right? So instead of being that novice buyer, we want to be the seller, all right? Prices then fall, and down here, if we specifically focus on the sellers, again, it's that same group of traders, only here they're selling after a drop in price, mistake number one. They're selling into a price level where demand exceeds supply, mistake number two. Okay? Instead of being that novice seller who's selling because of these scary red candles or, the bad news, we want to be the buyer, specifically right here at this black line with a protective sell stop just below the area. Buying right here, according to our rules, okay, is the lowest risk, highest reward, and highest probability time to buy into this market. Okay? Now, if you've ever read the trading books, okay, the books say don't buy here. Okay, they all warn you against buying here. They say don't buy right here where I'm telling you to buy. They say, wait for confirmation. Wait for confirmation of a green candle, right? Don't buy here because you don't know that there's buyers left. Let the market show you that there's buyers here. Wait for a green candle. But if we wait for this green candle to form and then buy, what's now happened to our risk? Has it gone up or down? All right, what's happened to our risk? It's gone up. Yeah, what's happened to our reward or profit? In fact, our risk has almost doubled. Now, what's happened to our reward or profit margin? Yeah, exactly. That's gone down too. Or that's gone down, right? Yeah. So now, if you were to, how would those two things work for you in a business or in a company? Would you ever be successful in a company doing that? Of course not. All right. And what we're talking about here today, by the way, any time frame, any market, you apply it equally. All right. So what we've learned so far, we're going to get to the charts in just a minute and take this deeper. We're going to identify supply and demand. We've learned to identify what the novice buyer and novice seller look like on a chart. Now, so in other words, we're selling short on the first retest, not the second, the first retest of a level, and we're buying on the first retest of a demand level. Okay? Because until prices move away from these areas, how do we know what the real supply and demand equation is there? You don't. You can guess, but why guess? The chart will tell you. The price action will tell you. So once the price moves away from these areas, we want to get in on the first pullback to these areas, but not just any areas. We're going to really define this as we go along this morning, all right?